Hi, good afternoon. Welcome to the marketplace. Coming up this afternoon, World Bank set to approve two separate funds for Ghana, totaling $400 million targeted at supporting budget programs and the Ghana Financial Stability Fund. Also, President Akufo-Addo makes strong case for the withdrawal of 30% of Ghana's public assets, funds and assets deposited in foreign banks as he rallies other African countries to do same in a bid to empower African banks and multilateral institutions.
He said we should take a decision that a minimum of 30% of the reserves of each one of us, sovereign reserves, should in fact be invested in the African multilateral institutions.
Plus, we sit down with a London-based law firm, director of Fort Worth Solicitors, Daniel Kwawu, to discuss what Ghanaian businesses can do to attract foreign direct investments.
Once you have been able to master the skill of expanding to other African countries, you will be able to replicate that to the UK market as well, even though the dynamics might be a little bit different. But you also are able to establish that you have the skills to be able to go beyond your own borders.
My name is Daryl. Kwawu. Thanks for joining us. Details coming up in a bit. And thanks for being with us, everyone. The World Bank is set to approve two separate funds for Ghana. The first is a $150 million, which will be approved before the end of this first quarter and targeted at programs in the budget. Secondly, the bank will approve about $250 million by the end of June for the Ghana Financial Stability Fund. Senior economist at the World Bank Group, David Elmali, tells Joy Business the World Bank is committed to supporting Ghana's economic recovery.
The World Bank is really engaged day-to-day in Ghana to support the government and other partners, to achieve this mission of reducing poverty. So a series of budget support loans that I have mentioned, there is the operation to support the stability of the financial sector, but the bank is currently engaged and will engage in many more areas. The bank is also preparing a dedicated operation to support the energy sector and its financial viability. There are operations to support MSMEs, small businesses, help them thrive and develop and grow bigger and generate jobs. And there are projects to help the social protection, to finance the social protection programs, notably LEAP, school feeding, and there are more in preparation in education.
Meanwhile, the World Bank has disclosed that 28 developing economies, including Ghana, with the weakest credit ratings, remain stuck in a debt trap with no hope of escape anytime soon. According to the Bretton Woods institution, their average debt to the size of the economy was nearly 75% at the end of 2023. That's 20 points greater than the typical developing economy. Here's more in this report.
The 28 developing countries account for a quarter of all developing economies, with credit ratings and 16% of the global population. However, their collective economic activity constitutes a mere 5% of global output, which makes it easy for the rest of the world to ignore their predicament. Their debt crisis, as a result, is silent, and it could intensify. Ghana, which is one of these countries, remains in debt distress. Secondly, the debt sustainability analysis by the World Bank and International Monetary Fund shows that the debt is unsustainable. However, with the existence of the IMF program, there are expectations that Ghana's debt sustainability will change to become sustainable by 2026.
Now, President Akufo-Addo is proposing that Ghana withdraws at least 30% of all public funds and other assets kept in foreign banks and financial institutions. According to the president, Ghana and other African states are fond of placing sovereign reserves in foreign financial institutions, a situation he believes is derailing much-needed development financing for Africa. He was speaking at the Presidential Dialogue on African Union Financial Institutions, organized on the sidelines of the 37th African Union Summit in Addis Ababa, Ethiopia. Bleda Suga has more.
It is the largest gathering of African heads of states and government. But beyond the assembly, the African Union Summit provides an opportunity to discuss critical issues confronting the continent. On the sidelines of the event in Addis Ababa, Ethiopia, African leaders discussed reforms that ought to take place in the global financial architecture in order to give boost to Africa's prosperity. As the champion of African Union's financial institutions, President Akufo-Addo made a passionate demand that at least 30% of sovereign foreign reserves be allocated to the likes of the African Development Bank, amongst others.
We should take a decision that a minimum of 30% of the reserves of each one of us, sovereign reserves, should in fact be invested in the African multilateral institutions. I speak about the ADB, I speak of Afro-Exim Bank, which would strengthen their balance sheets and strengthen their capacity also to facilitate more and more resources for our development. So these institutions are institutions which are ours and which we can trust.
As a key champion of African Union's financial institutions, President Akufo-Addo is leading a presidential dialogue seeking to call for some change and a global reform in the global financial architecture. Experts argue that Africa has been on the receiving end of paying higher prices and a cost for its development financing. It's the reason for which this presidential dialogue is seen as timely and an intervention that can bring about change. As the debate rages on, many African countries are beginning to gain support from other multilateral institutions, and that includes the Commonwealth. Having as many as 19 Commonwealth member states in Africa, Secretary General of the framework, Patricia Scotland, tells Joy News that a reform in the global financial architecture will be required in unlocking Africa's economic potentials.
And we are looking at how you restructure debt. We have Meridian, which is the debt management system in the Commonwealth, which deals with both public debt and private debt. And from looking at that data, we can see the trends and how we can help to turn it around.
Just this morning, our President Nana Addo Akufo-Addo was leading a dialogue, a presidential dialogue targeted at seeking for change in the international financial architecture. Do you agree with this posture of these African leaders?
We've been driving this for a long time, and therefore I was absolutely delighted to see, I feel like saying, my Ghanaian president really at the forefront, because if you look back to 2018, the Commonwealth was saying that the financial architecture was simply not fit for purpose. If you look at what is happening in so many of our countries when it comes to climate change, and so the structure, the financial structure, which does not take into account that vulnerability, simply doesn't work. And as the President was saying this morning, it cannot be fair.
And that was Blaise Sugar's report from the AU Summit in Addis Ababa, Ethiopia over the weekend. And top on the discussion amongst African leaders was trade. But we have already seen threats to continental trade with the exit of 3 countries from the ECOWAS. With trust at a crisis point, restoring faith in institutions is critical to unlock the potential of trade. In fact, that was the theme for the recent World Economic Forum. And joining me is international trade advisor and Africa business strategist Tessa Adamu, who is also the Director of Growth and Strategy at ETK Group, to discuss why rebuilding trust is crucial to propel trade in Africa and attract foreign direct investments. So good afternoon to you, Tessa. Why has it become important to talk about rebuilding trust when it comes to trade in Africa?
Important for Africa because when it comes to trust and trade, which is something that we're trying to stimulate on the continent, there's no trade without trust. People trade with partners, economies, markets that they trust. Without trust, there's no opportunity to collaborate and create what we would call that conducive condition for international trade, because trust is the fundamental building blocks of international trade, and also influences trade or funding allocations. It shapes negotiations, investment decisions, flows, cooperation among countries. And what we see is that with higher levels of trust, there's also enhanced economic opportunities, while with lower levels of trust, we see levels of lower kind of investment and development opportunities. So I think trade and trust go hand in hand. So this theme of rebuilding trust is quite important and comes at a pivotal point in terms of Africa's ambitions of economic development.
All right, so what is contributing to the low level of trust we're seeing?
It's the perception of risk in Africa. So when we look inwards, what we can also do is focus on rebuilding trust within ourselves in terms of between governments and businesses, between African nations. We're looking at things such as liberalized trade, removing tariff barriers, free movement of good people and ideas and innovation. And we are seeing glimpses of this with the introduction of AfTA, so the African Continental Free Trade Area, and it's also a step in the right direction.
All right, Tessa, let's talk a bit more about how rebuilding trust is beneficial to the African economy and in attracting foreign direct investments.
You know, Africa's global trade composition compromises primarily focus on commodities, especially minerals, fossil fuels. And when you're looking at things such as the service or trade sectors, it's largely centered around tourism. We're also seeing within Africa, though, a slightly different picture when it's intra-African trade. We see more diversity in terms of range of goods and services, value-added goods such as processed food, and also with services such as transport, finance, and business. But what we are understanding is that trade within Africa is solely, intra-Africa trade compromises only 14 to 18% of Africa's trade. But with that, I think with the introduction of AfTA, there's forecasts or projections of increasing that significantly, which would positively impact the African economy.
So what would it take to rebuild trust in the arena of international trade? How do we ensure a transparent approach to policies to enhance global credibility and open avenues for favorable trade partnerships?
What we probably need to be asking when it comes to the global partnerships is in terms of what Africa demands or asks from others as well. Because I think when we talk about transparency and trust are fundamental and they go hand in hand. And this transparency is a two-way process. So it's about others also recognizing or welcoming Africa's sovereignty and respecting that. But it's also about us as Africans in African economies understanding in terms of what is required to build that trust. It requires commitment, observing rule of law, stability, because for others to invest, what they need to see is stability and progress. But we are seeing a lot of that recently in terms of some of the legislations and regulations coming in place, which are indicating that there is more stability on the continent. Although we have seen fluctuations and devaluations in terms of currency, I think 2024 is looking a lot more positive.
At the World Economic Forum, we've seen the AU summit just end. I mean, issues of trade have come up. As you talk about rebuilding trust, what are your expectations?
And it's a catalyst for further change. I think for me, what I would like to see is the action that is taking place after this, because for many years we have seen these conversations take place, Africa being whether it's the center or part of the conversation, and then not much follows afterwards. So for me, the event was a significant milestone. It was key. It made all the right noises, but I think, as I say, the proof is in the pudding, and we'll see what happens after these conversations and how it actually directly affects the people on the ground.
And finally, what should African governments do to enhance global credibility?
It's all about improving the ease of doing business. I guess that's a very general and wide type of phrase, but we're looking at rules of law, regulations, bringing down inflation, the ease of moving capital into the country and out as well. These are all things that play a huge part in order for what you just mentioned, building trust and also reducing risk.
Tessa Adamo there, Director of Growth and Strategy at ETK Group. I appreciate your time with us. Well, more news for you on the marketplace. Director of Fort Worth Solicitors, a London-based firm, Daniel Kwawu, has urged Ghanaian businesses to improve on bookkeeping and other forms of record keeping to attract foreign investors. According to the solicitor, the lack of proper record keeping, especially financial records, sale of goods and stock taking, can be disadvantageous to the growth and sustainability of business operations. James Ishen has been engaging him.
We have seen an exciting trend where you have restaurants, you have fintech organizations, you have all sorts of industries, even the real estate industry, who are looking to tap into the market to be able to market their products to the African markets out there.
Now, let me also bring you to the conversation of some of the challenges these businesses and also what you experience with these businesses. What are some of the challenges in there?
Well, we realize that sometimes there's a cultural shock or cultural differences. So when they come in, they need somebody who will be able to hold their hands, to allow them into the system, to show them how things work over there. So when you have been trading in the African market for a while, you get used to certain things, how things are done. And then when you come to a new market and you realize that things are quite different, it's a bit of an issue. But with time and with the right help, they are able to adjust smoothly into the new system that they've found themselves in.
I'll come to the conversation of the African Continental Free Trade Area, if it plays a role in it. But let's now look at the Global Mobility Visa for the UK. What is it about?
Well, this is a visa scheme that allows individuals and businesses to be able to tap into the UK market, to bring their products into the UK market. So when we talk about global mobility visas, especially the UK expansion visa, this is what is designed for any business entity who is looking to set up in the UK market. So if you have a company like Multimedia, they want to set up an FM station for in London, this is the type of visa we'll be going for to get to some of the workers to come to the UK to come and set it up. So if you have a bank, you have a fintech organization, you have a real estate, you have a restaurant, whatever the nature of business that you've got, so long as you've been trading within the Ghanaian or international market for more than 3 years and you are looking to expand into the UK market, then this is the type of visa we will be preparing or assisting you with, so that you can get some of your workers or somebody that you trust or you yourself to be able to come to the UK with your family. It allows us to bring about 5 workers and their family members to come to the UK to help you to establish that business. And this is what the UK government is doing, because of course they have left the EU, as we are aware. They are looking to tap into different markets, and the Commonwealth market is one of the biggest areas that they are looking at currently.
Does the AfCFTA play a role in all of this? And if yes, what exactly is the role?
It does, in a sense that you realize that when you are into some of these things, there are companies who want to expand out there, and they have been before they expand to the European market or to the UK market, they have tried their hands in expanding to countries such as Uganda and other African countries. So once you have been able to master the skill of expanding to other African countries, you will be able to replicate that to the UK market as well, even though the dynamics might be a little bit different. But you also are able to establish that you have the skills to be able to go beyond your own borders. And when you are coming abroad as well, there might be certain products or certain experiences that you may be able to introduce. So you might have a manufacturer who is importing from another African country to be able to manufacture cheaply in Ghana, and for that reason he's able to re-export cheaply to the UK market to sell at a higher profit margin. So I think the AfTA plays a big role, because people now have wider market to import their raw produce, which allows them to then go further to even export to the European market. We have a situation where people have the misconception that these visa schemes are for the multinational companies or for the big organizations. So if the little shop owner somewhere who is trading in tiles, or who is got a little restaurant somewhere with maybe 2 or 3 workers, this is not for them. But that is a misconception. When we look at the eligibility criteria for some of these visa schemes, you realize that it is open for a wide range of business owners. Sometimes the difficulty we have with the Ghanaian business owners is record keeping. They don't have enough record keeping. They don't do their taxes. They don't file those. They don't do their accountant doing the record keeping for them. So when it comes to these things, then it becomes difficult. So what advice we give to them is that if you are looking to expand into some of these markets, these people are looking at your books. How well have you been running for the past 3 years? If you've got your record keeping very well, then we are open for you. We can get these things for you. It is not a matter of you are doing connection, you are doing this, or you have to pay extreme money here and there. You just have to follow the processes. And once you follow the processes, you realize that the process is very straightforward. And within 8 weeks to 12 weeks, you can be able to secure whatever you need to secure, the papers you need, the visas you need, and the licenses that you need to allow you to be able to move out there to start trading.
All right, you're watching The Marketplace. Let's turn to Let's Talk Tech. And joining me is lead for Eyes of Africa, tech pundit, Henry Kobler. Good afternoon to you, Henry. Good to see you. And so I want us to kick off with X, formerly known as Twitter, which has finally paid off the staff it sacked at its African headquarters right here in Ghana. More than a year ago, they were laid off, and the agency which represents the laid off staff say they've finally been settled. That's welcoming news, isn't it?
Yeah, very much. I mean, I think that it's welcoming news for our people that had just been jacked off on Twitter. But I think that I was expecting a more innovative point where they could rather be more engaging to find a different route to connecting back to the company and not just really receiving some level of money. The reason why I'm saying this is just to put it in perspective that you're looking at a very innovative leader that's coming in, and you're looking at how Africa could definitely route in to be a direct beneficiary. And as such, I mean, already having a direct connection to the company could have opened a lot more doors or a lot more negotiation and pathway to making sure that Africa also benefits directly. I mean, there could have just been a bargaining point of a stronger negotiation deal, which could have gone into, I mean, giving us some leadway to it. I basically will not be having almost all the details to it, but I think that it's a good thing where they've sort of been settled. It's their right. I think that they deserve it, but I think that we could have just gotten more out of this.
Well, I remember when the announcement was made that Twitter was going to have its headquarters in Accra, there was so much excitement, and now we saw what happened last year. I'm just looking into the future and what this says about future investments by this big tech giants in Africa based on what has happened.
Again, my disappointment comes in, from this part where I was expecting a more engaging, government coming into the rescue of some of these people. Again, really, what are the policies and lessons which we've learned from this part? I think that we've not learned really much. What are we putting in place? Are there some new policies that we've actually put in place to make sure that if there are new companies that are reaching out into our region, we're making sure that the people that are going to be employed in these regions are going to be secured? Trust me, it might not necessarily just be on this path. I've been on several platforms where the verification system of even doing withdrawals after working on freelancing becomes a bit tedious. Just because we don't have the policies and systems. But it's so easy to actually cite taxes being thrown out to a lot more, like, let's say, the Play Stores and all, on Netflix and everything. It becomes so easy to just implement taxes on that side. But when it comes out to policies to protect the citizenry, when it comes out to these tech systems, I think that we're actually always defaulting. And that's one of the things that we sort of need to put in a lot of effort, both from government side and then from stakeholder side.
All right, we have about 2 minutes. I just want to touch quickly on this other story, which is making the rounds, to do with the Tap and Go initiative, which was expected to modernize public transport. But then there are issues being raised about security. What's the story?
So generally, some tech people, when it comes down to tech systems, would always want to do some level of cyber penetrations when it comes into it. Generally, we've been talking about cybersecurity as one of the major concerns when it comes down to tech systems, especially within our regions. And so there have been quite a lot of stakeholder engagement and looking into some of the systems which government is sort of introducing into our region. And for me, the story comes in as it's a plug and play software which you could just buy and push it on the go. And so it's really not an innovative path, but that's really not a problem for me. I'm looking at the story in a point where how well engaging are privacy policies and concerns being addressed with some of the systems which we're procuring to push into the citizenry, especially when there's facial recognition, biometric collection, data collections, left, right, center with some of these systems. I think that for me, that's where it comes in. Data protection, how our data is protected in this region. If you're looking at the story, you're actually citing the server for the vehicle management system and the city CCTV on board these buses connecting to China service, which becomes a big major concern. These are things that the EU and the US are fighting for, and I think that it's a major header where we could go beyond. But it's a good call for most of the systems which you're introducing to rather be more circumspective and collective when it comes down to privacy and policies.
All right, always a pleasure to have you on Let's Talk Tech. Henry Kobler there. And that's it for The Marketplace. More news on our website, myjoyonline.com/business. See you same time tomorrow.